We have a savings crisis in this country. Most Americans have less than $1,000 saved, if they have any money saved at all. That's a really scary thought because the chances are you're gonna have an emergency in your life, whether it's a car breakdown or ending up in hospital. And if you don't have any money saved, you're gonna have to take on debt from a high interest credit card company or a payday loan company. Simply put, you need an emergency fund in order to buffer yourself from these sorts of issues that will come up in the future. But if you're gonna have an emergency fund, you might as well have it in a place that has a high yielding savings account as opposed to a 0% or near 0% savings account, which is prevalent at all the major banks out there. Credit Karma has seemed to figure this out along with a lot of other companies out there. And in this video, I'm gonna break down my review of the Credit Karma savings account and let you know if I think it's a good place to have your money. My name's Kevin. I make videos like this all the time about personal finance, banking, credit cards, and a lot of other things. So if you like that sort of thing, check my other videos out and subscribe to the channel. And if this video helped you out in any way, be sure to give it a like. I'd really appreciate it. Now let's get into it. When most people want to open a savings account, they're going to go to the traditional brick and mortar retailers out there like Chase or Bank of America or Wells Fargo. I'm here to tell you that that is probably a big mistake. The reason is because these accounts fail in two ways. Number one, they pay near 0% interest, which is a terrible thing. You should be earning money on your money in the savings accounts. And number two, they're gonna actually charge you fees for these accounts unless you meet certain criteria. And chances are, a lot of the people out there are not gonna meet that criteria, which means you're gonna be paying $10, $15 a month for something that you can get for free. That is crazy, and that is not something that occurs anywhere else in the world. You're never gonna pay money for something that is free. Now, Credit Karma just launched their savings account, and it is frankly a pretty good account. It has no fees and it has a high interest rate, but they're not alone in offering this product. A lot of fintech firms, especially in 2019, have rolled out an account very similar to this one, such as Wealthfront, and even firms like T-Mobile have their own version of an account that is online only with no fees and a high interest rate. But Credit Karma's account has a few other key features which I think are worth talking about, and Credit Karma overall is a company that I would recommend using because it allows you to check your credit score for free. Now in this video, I'm going to break down the Credit Karma savings account and tell you exactly why I think it's an account that you should check out. Now first off, let's talk about the interest rate of the Credit Karma savings account. As of the date of this video, it is yielding a 1.9% interest rate, which is a great interest rate when you compare it to the Chase and Bank of Americas of the world, which are yielding around 0%. And it's even a great interest rate when compared to other online banks out there, such as Ally and Goldman Sachs. This interest rate of 1.90% is among the highest interest rates of the accounts out there. And of course, it'll fluctuate month by month depending on what other banks do and what the Federal Reserve does. But by and large, this is a very healthy interest rate. It's worth noting that Credit Karma actually had a higher interest rate before the Federal Reserve started cutting interest rates, but that's not surprising. All accounts out there have seen their interest rates slash little by little as the Fed has cut interest rates in the past couple months, a couple different times. So it's not really that surprising. But the key is, how does Credit Karma actually arrive at this interest rate? Is it a gimmick or is it something here to stay? Well, I did some research and I determined that it definitely was something that, at least on paper, looks like it's going to be around and at that high level for a few different reasons. The Credit Karma CEO said that they pass on all of the interest that they get from all of the member banks that they actually put your money into. Now at a high level, you're going to interact with Credit Karma directly through their platform, and you're going to be able to see on your app exactly what balances you have in your accounts, and you're going to be treated, and you're going to be treating Credit Karma as if there were only one party in the transaction, you interacting with Credit Karma. Meanwhile, Credit Karma is actually going to use all of the back-end network that they've developed in order to farm around your deposits in various FDIC insured accounts in order to get the highest interest rate. They're going to pass on all of that to you. I find this to be a creative approach in order for Credit Karma to always look around and see what is among the highest interest rates that they can get and pass on that savings to you. This is why I think it's not going to be a gimmick for Credit Karma's interest rate that they're giving you, because they're passing on all the savings to you and they have a network of banks that they're actually going to be using in order to get that highest interest rate. So overall on the interest rate, I feel pretty good about this account. Now, there may be an account out there that has slightly higher interest rate or slightly lower interest rate, but by and large, don't get bogged down in the details, whether or not you're going with Credit Karma or another firm out there. If they're around the same interest rate, the chances are they're going to fluctuate up and down around each other. The point is, are you getting a healthy interest rate as compared to the traditional brick and mortar retailers out there like Chase and Bank of America? If the answer is yes, you're going to be doing just fine. You want to be able to get a little bit of money because it's going to add up over time. That 1.9% interest rate is terrific, especially when compared to that 0.01% that all those big guys are offering. That's an extra $106 every single year if you have $6,000 in savings, which breaks down to a little less than $9 a month. That's pretty amazing. I don't know about you, but I go to Chipotle often, and when I go eat at Chipotle, it often comes out to about $9. So if I just use Credit Karma as opposed to Chase or Bank of America, I'm going to be able to pay for my Chipotle once every single month, absolutely risk-free to me, just by doing a few little clicks on the screen. The second major thing I note about the Credit Karma savings account is that it is FDIC insured. Well, more specifically, it's actually FDIC insured in a lot of the ways that those fintech firms are actually FDIC insuring their bank accounts. What I mean by this is they are partnering with another bank and they're actually sweeping your funds into that bank account. Now, this is called the sweep program, and it's very common. You can't really find this out actually very easily on the Credit Karma website, but I know after doing some research that this is how they operate. Now, to be very precise, you actually don't get the FDIC insurance until your money is actually sitting with an FDIC insured bank once it's actually swept there, which may take 24 hours, 48 hours. It's really unclear. But by and large, for all intents and purposes, you're going to be receiving FDIC insurance. Now, Credit Karma actually gives you a combined $5 million of FDIC insurance. This compares to the traditional bank accounts out there and even other ones such as Ally Online, which give you only $250,000 of FDIC insurance. Chances are you're not going to really see much of a difference because most people aren't going to put that much in savings anyway, but it is kind of neat how they've come up with this solution, which is very similar to how Robinhood has gotten around it and Wealthfront as well, which is basically partnering with a few different banks and combining the FDIC insurance of all of those different banks on your accounts. So overall, you should rest assured that your money is more likely going to be protected in this account than not because it is FDIC insured. So let me just say quickly for those who don't know what FDIC insurance is, it basically is insurance from the federal government that your deposits in that account are going to be insured in the event that that bank goes bust. And the reason they have this is to prevent runs on banks. If the bank itself is having an issue, they don't want people to be fearful of putting money into banks for this reason. Now, that's why it's so important to have FDIC insurance on your bank accounts. It's actually why Robinhood's original rollout of their account way early on last year actually caused a lot of consternation in the market because Robinhood did not actually have FDIC insurance on their accounts. This account does because it uses the sweep program, which is a very, very good thing. And it makes it very easy to compare this bank account to another bank account because it's going to be apples to apples in terms of protection for you, the consumer. Then all you really have to do now is evaluate the user interface and the interest rate and the fees you're going to be paying, all of which are really good on this account. Speaking of fees, let's jump into it. Credit Karma savings account actually has no fees whatsoever on their account. So this means no account maintenance fees, which is kind of the typical fee that you're going to get at those brick and mortar retailers. As I said before, you're going to be earning a lot of interest on this account and you're not going to be paying any fees on this account. This is a complete opposite of all those brick and mortar accounts out there, which actually charge you money and don't actually pay you very much in interest at all. That's why this account is actually pretty awesome. If you have an emergency fund and you're leaving it there, it's not going to be eaten away by little account maintenance fees here and there, chipping away the hard-earned money that you've had. You're instead going to be paid for Credit Karma's privilege of holding your money, which is how it should be. Now, let's get into the drawbacks of the Credit Karma account. Now, like any other online bank out there, any other online savings account, it's going to be difficult to deposit cash in because there are no physical branches anywhere. This is the cost of free. This is the cost of a high interest rate account like this. They're able to actually pass on all of this savings to you because they keep their costs low. How do they keep their costs low? Well, the biggest cost is personnel and brick and mortar retailers actually having a physical presence in certain places. They don't have a physical presence, but again, there's a lot of banks out there which are very successful and people really enjoy, such as Ally and SoFi and Wealthfront, that don't have physical branches elsewhere. I remember when I had a brick and mortar retail bank and I went and switched to an online version of that bank account, I was a little bit nervous at first, realizing I don't know if I want an account that's only online. But as I've actually gotten used to it, I've realized all my transactions are virtual. All my credit card transactions are virtual. All my spending money is virtual. It's all digital money. And if I need cash, I could actually go to an ATM and withdraw it. Now, the Credit Karma savings account doesn't have that benefit of withdrawing cash from an ATM, and I'll explain why. But it does have the ability for you to transfer money in and out of the account. In fact, that's the only way that you can get money into the account and out of the account, because there are no physical branches. Now, to that point, Credit Karma does not have a debit card for their savings account. This can be a bit of a frustration for people who want to be able to withdraw cash, actual cold hard cash, from their account. This contrasts to a favorite account of mine, which I've spoken about many times before, which is called SoFi Money, which has a debit card on their hybrid account. It's actually a checking savings hybrid, so you're able to get a debit card on that account and withdraw cash from an ATM. Now, the Credit Karma savings account does not have a debit card, which means withdrawing cash is going to be difficult. You're going to have to transfer your money from that account into an account that allows you to withdraw cash from, such as transferring your Credit Karma savings account balance into Chase or Bank of America or SoFi or an account like that, and then withdrawing cash from there. Also, because Credit Karma's savings account is a savings account, you're actually limited to 6 transactions per month. Now, this has to do with certain regulations having to do with money laundering that the federal government restricts savings accounts from doing, and therefore they're able to keep the savings account costs low. But it is a little bit of a ticky-tack thing, and something that I find a little frustrating, because sometimes I actually have to transact more than 6 times in a single month on a certain account. For example, if I'm paying bills, or if I am shifting money around and I have to pay certain things out of that account, it's a little frustrating. Now, overall, my take on this account is that it's a great place to put an emergency fund. It is not a great place to be able to transact and do significant volume in, even if it doesn't have any account fees at all, simply because of that restriction on getting cash, and also of your limitation of 6 transactions per month. Me personally, I like simplicity in my life, so I already have one place where I keep my emergency fund. I keep it at Wealthfront because the interest rate is similar to this account, and it is very similar to how it operates. Wealthfront versus Credit Karma, I mean, they're about the same. It just depends on user interface really and interest rate at that time. And then I have most of my my everyday spend money, the stuff I use for my bills, and my traditional place where I get my cash, out of SoFi Money, and the account that I mentioned a few times, something that I find a lot of use out of because it is supremely flexible, it has no fees, and has a high interest rate, and you actually get a bonus if you sign up for it, if you're a new customer. I actually have a link in the description below if anyone wants to check it out. You don't have to use that link whatsoever. I've just been really high in this account. You can see my other videos. I've talked about this for a long time because I'm so fond of it. Now, with that being said, the Credit Karma savings account I think will be a really big hit. And the reason is because Credit Karma has 100 million plus customers that they that go to their site all the time. For example, I have Credit Karma myself because it's a great company to check your credit score with. I recommend using it if you want a place to check your credit score that's free and easy, and you can actually see your credit report. It's a really great way to do it. I actually had this account before, and I thought it was smart that they rolled out this savings account because it's just an extra little step, an extra little way that they can make money off of you. And when you log into their account, it actually prompts you initially and says, do you want to open a savings account? And I think the reason it's going to be a big hit is because they have so many customers already, and they're going to go there and they're going to be able to see, oh, they're offering a savings account, which has a really high interest rate, which is much higher than I'm used to seeing. Maybe I'll sign up for it. For all those people out there, I'd recommend opening this account for an emergency fund basis. And overall, I think this is a pretty good account because it has no fees whatsoever. I expect to see a lot of these accounts rolled out in the future. As I mentioned at the beginning of this video, a lot of fintech firms are actually starting to roll out these sorts of accounts where they're FDIC insured through a partnership with another bank, and they bring you all the functionality through their app. They provide you a clean user interface, and they pass on all the interest to you. This is going to be common, and it already is. You see that with Robinhood, you see that with Wealthfront, you see that with SoFi, you even see it with firms like T-Mobile. So it can almost be a little overwhelming if you signed up for Wealthfront earlier on in the year, or you signed up for Betterment, and now this account's rolled over and may have a slightly higher interest rate. Don't get too concerned about that. Be concerned with getting an interest rate that is pretty good. Don't focus only on the interest rate, because if you do, you're going to inevitably have another account that pops up, which is going to have a slightly higher interest rate, and they're going to entice you and you're going to move it over, and it's going to be kind of a pain. Now, if the interest rate is substantially larger than the interest rate of an account that you have, well, of course you have to open the account. So if you have Bank of America and you're getting 0.01% in your money, well, of course you're going to open this Credit Karma account. But if you have Ally or Goldman Sachs or SoFi, maybe this account is going to be something that you open. It's really up to you, and it's going to come down to functionality and form and preference for you. Do you want all of your accounts under one roof, or do you want an account that's a savings account here, a checking account there, and a few different accounts here and there? Or do you want it all consolidated into one sort of platform? I predict that all these different fintech firms are going to try to compete for you to have all of your different products under one roof. That's why you saw Charles Schwab introduce free trading, because they want to bring people in the door, and they're going to create a cash management situation. They're going to make money somehow. Same with Robinhood. They're going to have the cash management account now, which I made a video on if you want to check out, and they have their free stock trading platform. So Credit Karma is going to try to get you into their ecosystem, which isn't necessarily a bad thing. I don't think it's malicious, because again, all of these products are offered free, and Credit Karma primarily makes their money off of simple referrals. So they're going to show you different products on their website through, you're going to look at your credit history and your credit report, and they're going to look at that and say, this person can benefit from a certain type of credit card or a certain type of, mortgage provider. And they're going to offer that for you. And if you click through it and you go through it, they're going to get paid. And that's about it. It's very similar to Mint. So with all of that being said, I don't think it's going to be a malicious thing to be in their ecosystem, but it is something, a lifestyle thing that you have to really evaluate. Is it worth your time opening these accounts? I think that it makes sense to have your emergency fund somewhere and then have a form and function account somewhere else, and then try to simplify your life. But that's me personally. Again, it comes down to personal preference. So overall, I think the Credit Karma savings account is a good account to have. It's FDIC insured, the functionality seems pretty good, the interest rate is good, and it has no fees. These are good things to have, especially when compared to those brick and mortar banks. So simplify your life, choose a few accounts out there, and just know that this is one of the good accounts. So I make videos like this all the time about personal finance and credit cards, banks, all that sort of thing. So if you like that sort of thing, be sure to subscribe to the channel. And if I missed anything in this video, be sure to let me know in the comments below. I'd really want to hear some feedback, any video ideas from you. I'd really appreciate it as well. Give a like to the video, and I'll see you next time. Thanks.